All right, so we're going to be looking at the lead up to Bank of Canada's rate statement, all the fireworks that's going to be taking place around 10 o'clock. So I'm going to give you some scenarios I think may unfold for this morning. Now, admittedly, it'd probably be better for you to not be doing anything ahead of this. But if we see shortly after, about at least, in my opinion, 30 minutes after 10, then and only then would I think any signal or setup should be tried, even in the demo. A lot of news at 10 o'clock, nothing really coming out at the 8:30 hour. So we'll just have the bond and S&P. The influence of equities opening at 9:30, so we'll be looking at that as well. I'll recap what we mentioned yesterday regarding SPOOs. So let's take ourselves over to we'll get to this one in a second. Get this over here. All right. So dollar index, we slipped down below Friday's low. And scrunch this up. But we did not get down below this low over here. And I suspect that based on whatever Yellen says today, might be a catalyst for that to happen. We've basically almost cleared up any of this sell-side delivery imbalance, so buy-side delivery has basically been done. I'd like to see it punch up there one more time. I don't believe it needs to come back up to here, but it can. So it can spike up to that, fill in this inefficiency, give it buy-side delivery, rebalance that area, and then make an attempt to get down below the low. Now, if I'm wrong, and we expand through and take out these highs, we're going to be looking for a run back up into this level before the next significant price swing occurs. So either we run through this low today on Yellen's testimony, or we're going to fail to go below this low and run back up into here. There's a lot of trailed stops above this high, above the short-term high as well yesterday. So we'll see any kind of run on the trailed buy stops. That would be the target. Again, there's a lot of, even myself, I believe that dollar ultimately wants to get down to the 94s, but it's never a straight line. So it would be classic for them to use her testimony today to run up, knock out individuals in here and bust it up into this level, keeping this high intact, not coming back for anything over here, because this could be the beginning of the price swing, midway point, and then come down here. So we have a measured move idea, kind of look like, let's do this. All right, so we have measured move, first portion of the swing. Second portion of the swing puts us around about 94.20 or so, 94.25, 94.20. So we can see that as a downside objective if we lose the low. If not, we'll come back up here, and then it'll still become the ultimate level we're looking for intermediate term basis. So leave that there so we can come back to it another time. The euro pound made us look like a rock star. Traded up to 89.35. Really pushed up there. Traded through it. Traded through it just by about 12 pips. And then we've since now given up the ghost and maybe coming back to rebalance at, let's pull a 4-hour chart up. Yeah, we need to come back down to 88.80, 88.85, 88.80. In that area should be some support. If we lose 88.80, let's come all the way back down into this area here, and it'll be the most up close candle. 88.55. So 88.80 finds support, or 88.55 if we slip through 80. Euro dollar. Wonderful, wonderful price action, just like voodoo. The voodoo that you do. All right, so we have the ADR used from the opening price and then expanded it one more time. So we had 2 ADRs expanded from yesterday's New York Open. And true to form, boop. It's just a little bit later, but that's usually what happens. If you don't get the ADR the day you're looking at it, it usually happens the day after and hits it, bang. We only went 1 pip above it, and we have a really, really nice reaction off of that. So we have an order block sitting right in here where there was a nice move away. So let me do that. That's better. So if I take this line here, put it right on here, we can get maybe a run down and hit that level. If we lose this order block, there's really nothing in the way of inefficiency over here until we get down to this old high here. And I favor the up close, not the open and down. I want to see the up close. So it's probably going to get a lot of lines on here. I'll clean this up at the recap. Okay, so if we lose the order block, we're coming all the way down into here, which is real close to this order block. So it could spread a little bit more than what I'm looking for. But 114.20, if we lose, well, let's round it to that. If we lose this order block, 14.20 becomes our next area of support. But ultimately, I'd like to see it hit this and find a little bit of support and rally up, clean up some of the highs in here. At least try to give something more jagged, like go up and reject and then go lower. It makes much more sense to do that. Cable hit our 28.13 level. Fell out of bed, hit it, nailed it nicely, and then rallied up. We have a little bit of sell-side delivery that's got to be rebalanced in here at 29.05. So that level may be the catalyst today for an intraday high based on Yellen's testimony. Dollar CAD is kind of like the highlight of this morning. Let's go over to, let's just maximize this one. Let's go down to an hourly chart. Okay. Yesterday we had the buy stops taken out, as I mentioned in the recap. We have an order block that I still believe that we're going to hit that this morning and then maybe trade all the way up into 29.70. 29.70 gives way. We're looking for 129.95, 130 big figure, and then maybe even 30.20 is the upside. So if we get something violent today, it certainly could happen. If nothing more, if we do see some bullishness, we'll probably see the rest of the week run into that 130.20 level as a weekly objective. And I'm not saying it hits 20 and stops. I think that's just where we're looking to go. If we lose ground based on whatever happens, based on their rate decision, if we lose the low here, okay, let me put this where it needs to be at. Okay. Also, we mentioned this in the, I'm not sure if it was a live session or if it was my recap yesterday. It's a blur. But mean threshold, I said it had to hold on to that. That'd be the next level. We had a nice little reaction off of that. If this low gives way, then we're looking for a run lower, and it could get really nice on the downside if we take out this low. But I think everyone's short dollar CAD. So same scenario, whenever they use these rate announcements, it's just like a perfect allocated trade where they send it one direction and then immediately take it the other way. So we could come down, look at these two down close candles in here. we're going to watch this morning. Not live. I'm going to be having you guys do this on your own. But I'm giving you the scenarios I think may unfold today. So let's get through this. All right, so we got 29.08, basically 29.10. So what's the high on that candle? Yeah, 29.10. We'll look for 29.08 as a level to key off of. 10 needs to be the only one that needs to be touched. I don't like the wick here. I want the bodied candle, more beefy body candle. So I'll reference that one. And 10 is a nice round number, so we like that. And it goes below that a little bit. 129.08 is fine. So if we get that little bit of a retracement in there, and it does go higher as a result of, come on, work with me here, I'm live. There you go. So we have optimal trade entry, almost 70.5 lining up with that. And 79 cent trade zone level also gives us basically the open on this candle here, 29.03. So in here, we see it drop down. They could keep this low intact, send it down lower, and then vault it higher. Big buy stops resting right above here because we had that nice big drop down. And we tried going up, higher low, higher low. So if we fail to find any support here, we're running below this low. And then we'll probably see another, let me see if I can get to, there you go. We'll probably see another move. Like this. They say we keep this high intact, we don't go any higher. That puts us down here. Now the thing with this is just a reasonable objective if we lose this low. I don't think it's going to just go there, because if you look at a weekly chart on dollar CAD, it can be going a lot lower than that. Not today, not obviously in one day, but over a period of time we could see it. So 28.10 could be the downside best case scenario for intraday today, for just today only. On the upside, like I said, if we get through this high in here, we're going to be looking just for the buy stops intraday here, and on some crazy wild strength that could potentially happen because there's a lot of stuff coming out for Bank of Canada and for the Canadian dollar. 130.20 I think is the best you'll see on the upside. So the range extremes are upside 30.20, downside 28.10. And if I had to save my life which side I think it's going to go on, I would err on the fact I think they're going to take it up to take the buy stops personally, because all the sentiment is going lower, bearish, extremely bearish, dollar CAD. And you can see what they've done. They created a high. I mentioned this. Be careful. They have a sell-off set up here, but they came back, knocked those stops out, and they're real close to whatever stops have been trailed to here. And I think they may come all the way back up into this one at 29.70. So if it goes to 29.70, that could be a sell-off, but I think if it goes through that one, we're really going to 30.20. So it sounds like a whole lot of what if, and that's exactly what I said. You got to be careful. Don't try to put any kind of money on this, because they can take it both sides of the marketplace today. There's a lot of reasons for it to do it. As much as I like to see it ultimately go lower, you got to be prepared for them to do the opposite on a day like today. And then still later on in the week or to next week, it could start to resume going lower again. In other words, they could push this thing up, build in a nice premium, blow out 30.20, and then reject that and then just keep going down for months. It's a scenario that could happen as well. Let's see here, euro dollar. Nice little run. And get this where we're looking at both charts, daily and we've already used use this information. We can take this off now. Come on. All right, so anything on the upside is, we have a small little imbalance there. Almost filled it. What's that low? 1483. 2 pips short of it. Right there. That would clean it up. Now if we go through that, that puts us in the 115s today. 115.20, 115.50. Even though ADR is saying 14.96, we trade through this fair value gap, which could happen in a second or two. 114.96, I don't think it's going to stop there. You know, we'll see 115s in the form of 15.20 and 15.50. We do projection with the fib, just get an idea where they might like to see objectives. We have a 15.10 and where's that 62? 15.30 and symmetrical price swing takes us up to the mid figure I was talking about a moment ago. Yeah, instead of 15.55, 15.50. I like that one better. You can hear Bailey crunching on her bone. Really, Michael? This is really unprofessional. All right, so we have that. So if we lose the high, ADR high is not going to be the top. It's going to go to 15.10, 15.30. You could really probably do it aggressively, but we'll have to lose this fair value gap before it happens. Dollar index, let's go over here. Trade up into the lows I mentioned a moment ago before we were talking about the euro pound. It did come up and hit it. Come on. Come on. You know, one day when I'm doing this, and it's not going to give a spit about these little crooked things, but until that day, I'm going to have to worry about it always. All right, so it looks like we could potentially see that run down below. Let's take our line here. Here, so that we've got a point of reference on the dollar. Nice, almost came up into 95.91, today's high. Oh, it did exactly hit it perfectly to the pip. So we filled in a void, hit a bearish order block, last up close candle. So it should really run down. It should go lower. Cable, let's see what that's doing. See if we get any kind of lift on that. Did hit our level here. Filled in that void. Now, all of the inefficiencies have been filled on cable. On the daily, we've found support at 28.13, 28.15 as indicated yesterday. If we see higher prices and we trade through yesterday's high, we really got to be focusing on 30.55, 30.65. I think that'll be, once we lose this high here, we're going higher. 29.70 is not going to be a speed bump. This high is not going to be a speed bump. They're going to jam it up above 30.55. But we have to lose yesterday's high to get there. So we have to go through it, come back, find some kind of a discount array, and then we can key off on that. Dollar CAD. Oh, Bailey, be quiet, baby. All right, let's go take a quick look over at the bond market and E-mini S&P. All right, so apparently her speech has been released before she gets up there and does her rap about what should or should not happen. So we're seeing all that happening in the marketplace now. Bonds are rallying. We have an imbalance up here. 152.22. E-mini S&P came down, ran out the stops we were mentioning yesterday off of the 24.26 level. Went lower as a result. Let's check out this. Yeah, 52.24, and then 53.03. That's our objective on today's bond. 53.03, 153.03, right over here on the left-hand side chart. A couple ticks in that. Let me take a peek real quick over at the dollar index. CAD just hit the 129.08 level. So we have a green light for all kinds of movement this morning. Let's go back to Forex. Bonds have indicated we got a nice move. One side direction. All right. So 29.08's been nailed. It's nice to see that so far finding some support. If they hold that there and sink the dollar, that could be a relative strength play on Canadian. Again, everything for Canadian dollar is bearish, 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 and I think they'll just take it up against it. Jam everybody's expectations. Make a run through yesterday's high with cable, and that puts us to 130.55, 130.65. Doesn't have to happen today. I don't think it would happen today, but I think we'll see that if we get through yesterday's high. I think we'll see 30.55 by Friday's close. Euro dollar. Our levels are in mind. 1510, 1530, and 1550. Let's go into an hourly. Yep. Nice little pop off of that level. 88.80. The low. 88.80. Perfect. So we're just in striking distance on that 95.43 old low over here on the dollar index, and we'll see if there's any legs underneath it if it trades below it. In other words, does it want to run and expand and not just do a 10 to 20 pip grade sweep? So it needs to get below 95.20 in a convincing fashion. Otherwise, it's just going to be a stop run. $1. I don't think that's the case. I think we'll probably reach for 94.75. It's only 75 pips. We could get a big range out of today. All right, let's see what we got here. I love when the price action is going right to our levels. I love it. So much fun. Nice little reaction off of 29.08 initially. Still got an hour and 10 minutes before Bank of Canada's fireworks show. Another scenario for dollar CAD that could happen, they could really go crazy and send it lower, all the way down below out to 28.59 low, reject that, and then send it all the way back up 100 pips or more, take the buy stops out from last week. That's another scenario that could happen. And you probably just heard Bailey running through my office. She's discovered that she can haul rear end through here. These little girls. Let's take a peek over at Aussie. Okay, Aussie dollar. A little bit of a lift. Got some Viagra going on. Let's take a quick look at the 4-hour. All right, so it appears that the trade idea I had back in March and got stung on, looking for a move into the 77s, they're making an attempt to get back up in there. This one here, if we get through 77.15 on this pass, if we go up to a weekly chart, you'll see. If this thing fails again here, I'm going to blow my brains out, basically, because it's driving me nuts for a while. We've had several attempts to get up over here, 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 here. How many times is it going to knock on this, before finally there's a big release? And this thing, if it releases through here, there's a lot of pent-up pressure where it could go. I mean, it could go up there. Bullish order block. Bullish order block. All kinds of wide open frontiers up in here. This could be a nice move, longer term. Got a little bit of a fair value gap up here as well. And this is a weekly chart, so we got some range. 84.25s. Rejection block. 80.43. Could get really, really interesting with the Aussie. Look at that. It's a beauty. Let's go back out to dollar index. Still haven't taken that low out. Now, what do we do? If they release the text version of her speech, do we wait as traders to see what she says and if it's changed? And what effect are we going to see in the marketplace at 10 o'clock as a result? I mean, did they use, I'm in my mind, this is what I'm thinking out loud. So the internal dialogue is okay, did they release the text version to manipulate and throw off sentiment to get traders thinking one thing right now, and then at 10 o'clock, when the actual speech comes out, it'll be perfect justification for, well, yeah, not a lot of people didn't read it. They're just now listening to her testimony, and then now that's the real move. Or will there be nothing apart from what's already been done here, and the only excitement will be in the Bank of Canada's fireworks? Don't know. Tricky. As Run DMC said, it's tricky. Some of you folks across the pond, who's Run DMC? All right, so 29.08. Look at these equal lows in here. So we had a mean threshold, yeah, and it offered some support, yeah. We got equal lows in here, also with this order block. It just jumped off at me when I came back to it, so that could be a run on stops. They'll take these out below this low and then clean this pseudo double bottom. Tops becomes bottoms, bottoms becomes tops. Sure, buddy. Blow that demo account out. All right, so cable. All right. Cable could be holding off until London tonight. Let's take a quick look over at the economic calendar. Get a fresh look on what's going on tomorrow. All right, so we got today's business here. It's all about the 10 o'clock hour, and crude oil inventories at 10:30. So 10 to 11 is going to be wild. We'll probably have a lot of price action late in the day when, usually it peters out around 11 o'clock, 12 o'clock, usually in the Forex market, New York time. Because of the late news and the impact of the Fed and crude oil inventories and Bank of Canada, all that stuff coming out, and then you have a Bank of Canada press conference around 11:15. There's going to be so much coming into the marketplace late in the New York Open and basically London close, I think people are going to be putting in overtime today, and we'll probably see some late market action all up in the 2 o'clock hour, maybe even to 3 o'clock when the bond market closes. So we'll probably see a lot of movement still throughout the rest of the day. So don't think it just peters out in London close. You can see here we have a 4:30 in the morning medium impact Bank of England credit conditions survey. They could probably use that as a smoke screen and then make that run for it. And we got, are you kidding me? She's talking again tomorrow? Another 10 o'clock testimony by Yellen? Good grief. We might have to do a London session tonight. I don't want to be sitting through another New York session, so we'll probably have to trade up and do a London Open at like 4 o'clock in the morning. We'll get together like 4 o'clock, and then I'll just do the homework session that I gave you last night for the 2016 moves. We'll just do that during the New York session and not do anything with the foreign exchange pairs. Give me a vote of 1 if you want that, or a vote of 2. No, let's not do that. Do I even got to tell you what everybody's saying? So we'll be meeting at 3. So we're probably going to be meeting. We'll just set a meeting time for 4 a.m. my time. We'll get together then. We'll watch the effects of cable. Because if we get the move, I'm thinking. Now, what would cause that not to occur? Say today, for whatever reason, say cable rips and takes off and makes a run for that high. If it blows out today, then it won't be a London session opening of a trade there. But otherwise, 4 o'clock in the morning, we'll be looking for that scenario to get us positioned. And then we'll hold throughout the New York session. I'll have to babysit it with you guys in between the discussion of the 2016 commodity mega trades that have unfolded for the first half of the year. All right. Would you talk about what to look for after these types of erratic news moves? What opportunities form? How to anticipate them? One of the things that that I'd like to see happen on days like this is, number one, you got to let some measure of dust settle, because you never know what's going to happen. The speeches, while they're always painted in a form that supposedly is going to inform you, they're going to do you a favor and bring you up to speed about what they're going to do and how that's going to affect the marketplace. And it's never really designed to do that. It's a perfect excuse to manipulate, okay? And sometimes it's clear to see what side of the marketplace they're going to make a run for. When I don't have that, and I admitted today that I don't have that right now, so I want to wait and see what happens. And usually about half an hour to an hour after the impact of that stimuli that comes into the marketplace, either by a speech or a rate announcement, then and only then, whatever liquidity pools reside in the marketplace still, whatever inefficiencies are left intact, we go back to the same order of business, reaching for what side of the marketplace the market has kept intact. Has a higher time frame institutional order flow remained bullish or bearish? Has it changed? Has there been a significant high taken out and now takes us into the likely scenario of a bullish market institutional order flow? Or has a significant low been taken out and then it changes the tide to institutional bearish? So it's not rocket science. It's not like, it requires a PhD. The things that we've taught, you just go through that whole gambit again, going from a higher time frame down to a lower time frame. But you have to resist, even though it gets exciting sometimes and you see these really big snappy moves. Look, if people could do this consistently over and over and over again, okay, they'd be selling courses and making, signal services, and people would be signed up for it. I can be lucky sometimes and catch moves like this, but I also know I get pissed off when I know I shouldn't be doing it, and I go in and do it, and I get tagged. So I've learned over years simply not to do it. And I understand there's a fireworks show. Something happens. There's a lot of movement. Am I going to be right when I put my trade on and take the assumed risk? I don't know. And the uncertainty of it, it's not worth it to me. When I know on the other side of the news, I may have missed the ideal scenario entry, but at least I know what side of the marketplace it's going to be running towards. I'm not going to make a move after that. Who cares? It's not about getting every move or being perfect or being, whatever you want, whatever you're imagining in terms of being this unicorn in the market that doesn't exist. You're not going to get everything, period. It's just, there's no other way around it. Let's go back into... So we stopped dead right on that bearish order block. Hit it, nailed it. Putting in some tweezers in here for candlestick traders. I don't trust that. Looks like they're trying to build a case for getting sentiment built up for a high to form. I don't believe it. I think we're going through it. And euro pound, let's take a quick look at that one again. Revisiting 88.80. A little bit of an imbalance down to this high. We'll go back to the bond market in a second. Let me look at the 88.75, 88.74. So we slipped through 80. That would be a nice area to rebalance. I don't think it needs to come all the way back down here. In fact, if it does, I think that's actually a weak indication. It shouldn't have to come back down below 88.80 by any significance. I think 88.75, 88.74 should do it. So that way it blows out the cleanness of support and resistance idea guys that have traded this and started to see a little bit of a move. Their stop loss is jammed right below, or maybe many times right at 80. So if they dip down to 75, that essentially takes them out, but doesn't lose all the market structure here. If we look at the price swing, the 62% retracement level, just a little bit above the highs, 70.5 or sweet spot on the OTE, puts us right in here. So if we get down to that, I don't think that is necessary. And to get down to that level, I would rather it not. Either it finds support at 74, or we'll probably, if we go this deep and rally, whatever rally after that, I think it'll fail. We'll leave this high intact, and then we'll make some moves for the low side. If everybody got down here, if that's the case and we rally and fail, go lower. Higher than we are here, if we find support at 88.74 and rally, it'll be a new high. But if we get down to here, I think a rally from that point will fail. We'll probably get up to, my eyes are failing me here, 89.30, 89.29, and leave the high intact, and then go lower. And the reason why I say that is because it's not necessary to lose that 88 level. 88.80 should find support. And if we dip down really deep, I don't think it's required or necessary. So I think that would be really a breakdown in market structure. And if they see a rally, folks will get excited about that, thinking they're going to take this high out. When I see it getting to this level here, failing, and then going lower. Euro dollar. Did it fill that gap? Sure enough. Lovely. Lovely. I can't remember. I want to believe I had 1490 line on the chart, but I don't know if I did that after the fact or if it was in my live session yesterday, but 1490 was the level I had in mind. Was it in there yesterday? there saying no. Are you sure? Tina's saying yes. We got the Bulls and the Bears fighting over whether I had 1490 in. I'm almost certain I had it. Now I got to go back and look at it. I know I didn't add it this morning. So either it was in the live session or I put it on in the recap. One of the two. But nice reaction, and more importantly, the reaction with the ADR technique I gave you guys yesterday. Cool little things like that. You don't get that from books and people. That you get that from experience and testing theories, using expansion ideas, and that's how I came up with it. I just looked at it and said, well, if there's a scenario where we'll see an expansion move higher or lower, and ADR is no longer an impact because it's been hit and achieved, how can we use that range? Well, clearly on the opening price. And you can do the same thing with the opening price at 0 GMT. Do the same thing on that level. I don't trade this pair, but I'll pull it up. Being asked euro yen. Euro yen. There you go. Fair value gap. Closure. Stops are resting below here, so that's where they're going to reach for right in here. So that's your downside objective. I promise you in August we'll talk about how to trade these other pairs. I just don't want to do it because I know what's going to happen. You're going to see a lot of big moves, and they do create big moves, but I can't get to tax treatment trading them, so I avoid them. And it takes a lot of adjustment because I used to trade the Beast pound yen. But in the States, see, I'm walking a little bit away from my desk. I have to grab my drink I left on. The moves are nice. They're great. But when you sit down with an accountant and you have to do your taxes and stuff, if you do a lot of day trading like I did, it doesn't work well for you. All right, so let's go over to Canadian. So far we see a little bit of a support level at that 29.08 level, just like magic. Cody's in New Orleans, so he's sending me some things. And I had to just get back to him real quick, so you probably heard some of that. I'll screen capture some of the folks that need assistance while he's down here because he's got a little bit of time to help me out. So, all right. See, euro pound. We dipped down into. Let me get this thing off here. Dipped into the gap. A little bit further than I would have liked to see, but if it can reject off that, that's good. Kelly left the ADR low there. Boom, how about that? All right, so cable. Let's drop these bad boys in here. Cable will probably get really sloppy the rest of today, throw traders off, but I think it will overnight. I think we'll see movement on the upside. Again, we're making a march for that 30, 55, 30, 65. So how is that going to potentially pan out? We have this old high here, support in here. So if we run a little bit, say we take out today's intraday high and kill these guys, I think these tweezer tops are a bearish indication, which is fun. I always like to watch that kind of stuff. Let's use this over here. Right there. And what I'm doing is the bodies of these candles, the last up close candle, rejection block, finding support, the wick here, and the wick here. All I did was outline that. I want to see price stay above this. I don't want to see it go below it. We have an order block that's built in there as well. So institutional order flow, ideally, should be seen like this. This low, right in here, this wick, if that should stay intact. If we go above these intraday highs and do not run above yesterday's high and leave that range intact, run through the tweezers, these long wicked candle wicks, run through that by a little bit, maybe 29.10, 29.15, fail to go above, and then consolidate. Then whatever that range would be, and we'll say, let me put it here. And this is all forecasting, so these are the types of things I do. Say it's 29.15. We can use the institutional order flow low that we're expecting here, which would be this low here, project it up to that 29.15. And again, the idea is, the analysis is, we're not going to go above this price action, leave the wick intact, so we're below yesterday's high. We're going for 29.15 as a projected high. That gives us in this area here, with this order block that overlaps, that could be the scenario for the London session entry tonight. So we'll look for 28.80 to 28, yeah, 128.80, so thereabouts. So that's an area or a scenario I'd like to see unfold for tonight. If we keep the range intact and don't go below, I'm sorry, don't go above yesterday's high for cable. ADR low, hit on euro. Lovely. Let's check out CAD. I really want to focus on CAD. I think that's the one I should do 1,000 lots on today. That just wouldn't be a professional if I didn't. What did he just say? I'm painting my toenails. And what did he just say about 1,000 contracts? All right. Aussie. We have $76.70 should offer some support and then make a run for $76.95 to 77 big figure. So that's the outlook I have for Aussie. I'm not going to say anything more about that one because I probably got 1,000 contracts on that one. So 29.50, I like that still for dollar CAD. It's just, I mean, think about it. Look, we got the dollar failing to go below that low, which is classic because, like I said, there's so much built-in dollar bearishness. I mean, everybody, I don't care who you ask, oh, the dollar's going down, it's going down, it's going down. And it very well may. But on days like this, and now looking at the economic calendar, if Yellen's speaking tomorrow, it just gives all kinds of reasons why they'll steal that from you. They paint, sometimes opportunities are cleverly disguised impossibilities. And I don't mean to sound negative or pessimistic, but that's just the reality of it all. So if we look at the dollar index today, yes, the testimony has not been orally administered to the marketplace, the community at large, but apparently the text version has been out there. So now maybe the thunder has been stolen from whatever she says at the 10 o'clock hour, and we don't see that breakdown on that low. If that's the case, there's going to be a lot of rushing in to cover on these dollar shorts, or they'll pressure them to do that by repricing above 96.15, 96.20. Then everybody that has a stop above here will start getting nervous, and anyone that hasn't had their stop lower to that point will bring it down, which brings in more liquidity or draw for a price to get up to that 96.50 level. And then we'll have to see dollar trade to that lower 94.75 level at some later time. And it could be next week. I don't generally recall them putting out a text version of a speech before. I mean, they probably do it. I don't pay that much attention to it. I just know the economic calendar suggests these types of things are going to happen. I rarely follow the finite details or the stuff that goes along with what they're doing, what they're not. I just know that this is when manipulation takes place, and I'm looking for scenarios. So to answer your question, Christian, I don't know if they've done it in the past. I've never paid that much attention to it. In fact, I didn't even know it until a couple of the members in our group mentioned it in the questions area. I'll give you some suggestions on people that do taxes for traders in the States, but I can't do anything outside the States because I don't understand the laws outside of the U.S. So you have to do your own work on that. Do I completely stay out of the market whenever there's a high impact news? No. There's times when I do. There's times when I will trade ahead of rate announcements. And Chris Laurie went bonkers when I told him I did that until I did a couple times in front of him. I told him, I said, this is what I'm doing. And one of them was an Aussie trade, and one of them was, in fact, it was actually a Canadian dollar trade. But it was because we were looking at Canadian dollar together, and I knew he was long, but I was ahead of it. I went in, and it panned out, but he was like, that's crazy. I never do that. I'm like, well, if I know where the most likely liquidity run is going to be at, and I feel confident that it's one-sided, then I'll do it. But in this instance, I just know we're so close to that dollar low, and it's just like a carrot dangling. Come on, we're going to go down here. Come on, let's go down here. Dollar's going to go lower. Dollar's going to go lower, and it rallies up 120 points. Then what do? You're angry. Trading doesn't work. Technical analysis is a bunch of mumbo jumbo, and you get angry, and it just causes you to second guess, which is exactly what they want. They want you to not trust your analysis, because if you start losing your mind, and losing control and focus. If you lose focus, then you're not going to see what they're going to be doing. You'll be too busy being angry instead of saying, okay, well, that was wrong, so now what are they going to do? If they're not going to take it lower, what are they going to do? They're going to reach for the buy stops. They're going to take it higher, which means foreign currency is going to fall. All right, do you advise looking for a buy at that support level in Aussie since I collapsed mine from yesterday? I was asked what I thought about Aussie, and that was the only thing I'm going to say about it, because I don't want anybody taking what I'm saying today and going nuts and trying to take trades on it. I'm not speaking cryptically, so to hide some kind of secret knowledge or whatever, I don't personally think you should be trading today. A lot can happen. You get spiked out, and you'd be mad and angry. Have I ever considered using retail tactics during months when my methods do not work? My methods work on every month, but I'm not a scalper that will take like 10 pips and be happy with that. To me, it's too much work to be doing that. So there isn't a month where my stuff doesn't work. My style of trading is one shot, one kill. So I want scenarios that really lend well to that. So on a personal level, I don't feel confident taking trades right now with it. And to be quite honest with you, I'm always being tug of war back and forth because of questions, emails being asked all the time. And I've already mentioned this in the beginning of the mentorship. When someone gives me an analysis or an idea, my mind clicks to contrarian. Everybody else is wrong. So if someone's asking me why they should have their stop loss here and they're going long, I'm immediately looking to go short. That's how my mind thinks like that. And it doesn't mean I'm right. It just means that I know that's how I am. So it causes me, it's like chaff, there's so much distortion in my analysis because I have so much feedback, I have to give to everyone else and answer their questions. My mind's going all over the place in terms of buy, sell, time frames. It's very, very hard to focus right now. So I'm anxious to get to the end of August because I got a question by one of the members, and this is for you, Igor. My clarity will it'll return to me because I won't be in live settings with you. I won't be in front of charts being asked, like I'm getting asked for pound yen because I mentioned it earlier. And the person keeps asking it over and over again. And I don't want to answer the question. I'm not trying to be rude, but I don't want to talk about it because all it's going to do is invite more of that same question later on. And those pairs, I only want to do one discussion about those in August. And that's it. But because I get questioned all the time about specific pairs or specific directional concepts or what my view is, or am I thinking this is the right way of doing it? And can you tell me if I'm doing this right? Because of that, it has caused me to have so much overload in analysis, it's hard for me to pinpoint what I want to do. And because I'm always constantly doing something, to me, it's just more responsible for me. If I intend to win the Robbins contest, I have to have undivided attention. I have to do that way because I'm going to be taking risk that I'm comfortable with. But if I'm taking risk that I'm comfortable with and I can't focus, like the Aussie dollar kicked me underneath $5,000, and that one hurt. And I knew if I do that type of trading while I'm being questioned and asked all the time, I'm not going to perform well. And to be quite honest with you, my ego will not let me go through the rest of this year and not win that contest. I absolutely have to do it. I have to do it. I'm going to do it. And not because I'm selling something later on, but I just need to have that done. I have to. I don't care if I win by 1%, my name's at the top of that list. And that's just the bottom line. So I know I can do it. I know I will do it, but I have to do it when I'm not being inundated with 1,000 different questions about this or that. And it's hard to focus. So that's that. To answer your question, that was a long answer for your question, Tony. There is no month where my stuff doesn't work. And I would never use retail stuff. I like using it for reasons to build better odds in my favor based on the stuff I use. I have found it difficult to find one-shot, one-kills because of the focus that's needed. A lot of you realize that it takes time for me to do the sessions, and I have to wait for them to compile, and then I got to do the updates, and then the whole time, when we do payments and stuff, it's not a one-day thing. It's literally 2.5 weeks, because it's 2.5 weeks of people straggling in late with their payments or their satisfaction and stuff, and I'm always answering questions. Sometimes they didn't do that right, and then I'm having emails on top of it, and sometimes I get emails from folks, hey, look, you're not answering my question in the forum. I know, because I will never keep up. And that's why I said at the end of the mentorship, all those questions, I will come back to all of those and answer. There won't be an unanswered question, but I can't do everything in 24 hours. I can't. There's no way I can do it. It's just me. Cody can't do any analysis. He helps me with payments and helps me with some forum stuff, but I can't do all that. It's impossible. There's no way on earth that I could do everybody's questions every single day and the emails. And then folks literally, they ask me, can you help me with this? And I got to do like 10 or 15 minute, sessions with them to clarify something that I can't articulate either in a text or I do a short little video, to answer their question that goes directly to them. I'm doing this all the way up until sometimes 11 o'clock when I've asked if I could have till 5 p.m. till the following morning. That doesn't happen. I'm working until like 11 o'clock, 11:30 in the morning, at night, then giving up at 6 and getting all ready to go again. So it's a lot. All right, so let's go over to S&P now. Thank you, Graham, reminding me. Where are we at here? Boom. Okay, where are we at? So, 153.03. Nailed it beautifully. I should be a bond trader. I get so lucky with bonds. So we have ES trading at 24.35s. Let's maximize this, get some perspective. All right, so we have a little bit more up here. So 24.38 1/4. That bearish order block's beefy. It could probably run right into that. It's 24.39 1/4. So 24.39. And 2.5 more handles of room to go. And we have buy stops resting just above here at 24.45. And then we got 24.50. So we can see 24.45, 24.50 today on SPOOs. Okay, equities open. But I got a little bit of a premium in here now, so we could maybe, it doesn't have to, but it could come down to 24, what is that, 24.29. 24.29, find some support on the bullish order block, expand to 24.40, 24.45, and 24.50 as a daily objective. How much above 24.50 we get, I don't know, but I think that's a likely scenario. We'll see those prices trade, if not today, tomorrow. But because we have all this impactful news here, it could send it up there just in a straight shot and not even come back down here. Sometimes the open gives you a little bit of a retrace before it takes off. Other days, unless you entered early, and back in the days it was unless you entered during Globex, before the market opened open outcry. That way, you can capture those moves that take place right from the opening, take off, and they don't ever have a retracement. They just keep on going. Those are the moves I was burned by when I was doing a lot of trading until I learned that, hey, look, there's opportunity to get in. You just got to do it early and just weather it. Just grind it out and just hold on to it and just see where it goes. Let's take move this down. Yesterday, when we were talking about the bond market, I gave you the bond SMT divergence, and the Tuesdays technically are a really good day to trade bonds. Tuesdays and Thursdays are really good trading days for bonds. I'm not sure if I've taught you that when we were talking about bonds, but Tuesdays and Thursdays are really good days for technicals to be good for bonds. I don't know why. Don't ask me why, because I know I'm going to get that question. I just know that that's just the way it is. And if you're going to be a bond trader, don't trade on Mondays. Wednesdays could be an iffy day. But generally, Thursdays and Tuesdays generally give you really good setups, and you can go back and take a look at some data go through and you'll see what I'm talking about. But S&P trading are good on Mondays and Tuesdays and Thursdays and Fridays, unless it's impactful news like today's Wednesday. We have all kinds of business coming out. So that's what's causing all these big moves. But generally, without the impactful news that we have today on the calendar, Tuesdays and Thursdays are really good bond trading days. So if you trade the bond, Tuesdays and Thursdays are good days there too. And again, I don't know what leads to that. I'm sure there's something that causes it. I just never been able to pick it up. But you can see the divergence we outlined yesterday for bullish bonds. It's gone up. And that's the benefit of going through all the stuff that we've gone through, is to broaden your horizons, not just, I want to be a Forex trader. Because then you're a one-trick pony. And you don't want to be that. You want to be able to be flexible. You can go into any asset class and carve out a living. And that's the goal. That you're a trader then. You're a specialist by choice if you want to be a system trader. But a trader can go into any market asset class and just own it, do well. Adele says, I want to be a commodity trader, basically. Some of the moves that are so generic, like lean hogs, you could literally, and I'm going to say this, and I mean everything I'm going to say here, lean hogs, it sounds silly, like you're trading pigs. Yeah, you're trading pigs, okay? But people eat bacon. Who in here eats bacon? Give me a one if you eat bacon. It's going crazy. One. I'm sure some of the folks in here don't want to eat meats and stuff, and that's fine. I don't eat steak anymore. I gave it up. I watched a YouTube video on how they slaughter cattle. And I'm like, oh, I can't watch it. I can't eat it anymore. And I love steak, so I still eat chicken and fish, but I cannot bring myself to eat steak anymore. So, but anyway, I'm digressing. Lean hogs, okay. I do eat bacon maybe 3 or 4 times a year. My wife swears by it. She thinks it's its own food group. My kids love it, and I wish they didn't eat it as much as she makes it. But the long and short of it is, that is a market that is so consistent. It's absolutely consistent that you literally could make your career off of the seasonal tendency that market has and do nothing else. And I'm telling you, that is like one of the sure thing deals, okay, in trading. That's why I shared it with you. If you're looking at trading as a medium for you to get wealthy or to have secondary income or just a pastime that some of you don't want to get rich. Well, I don't believe that's sane. I think everybody should have a wealth interest, not to be like Bill Gates, but to be better than you are now. But I think if you take the time to really invest in the seasonal tendencies that take place in the commodity markets, because they're real markets. They're not, abstract. They're not, synthetic. They're real. They're the world's grocery store, okay? And they're always going to have value. You're starving. You want a share of IBM or Amazon or Apple, or do you want some wheat or you want some bacon to eat? Obviously, there's always going to be value to that. Because of that, and because there's seasonal impacts that affect that, you can do very, very well trading commodities. And it's not limited to just lean hogs. There's other seasonal tendencies we outlined for the grain markets. And boom, look what happened. We just saw the big pop in the grain markets. It came to fruition. We talked about that in advance before it even happened. So I'm counseling you to don't put all of your eggs in one basket, so to speak, with Forex. Don't do that. Don't do that, because you will miss all kinds of amazing opportunities to grow as a trader. And while you may not have the funds to be able to do some of the commodity trading, eventually, if you stick to this stuff, you could. And if you do, and you participate in these other asset classes, man, you can do very, very well. You can trade everything off of Interactive, yeah. Interactive Brokers. So 2440 is next upside level on SPOOs. Hang on 1 second. Go back over here to Forex and get ready to close this session. 9:45 is approaching. All right, so we had our fair value gap, beautifully delivered, sold off. Get ready to cash out my 1,000 lot short on the euro yen. He said he never trades that. What's he talking about? All right, so the dollar index, if we get through this equal low in here and we expand up, I believe the 96.20 is our level. We'll see that run. Now, they could spike it through 96.20, clear this equal highs up, and then make the drop down into this old low. So I'm not thinking just get through here, run the highs out, and then keep on going. Be mindful that they could just be taking it above here. Forget this level. Think about it like this. Yeah. They could spike it up, clean this up, leave this intact back here. So this high stays in place. They run the buy stops out that have been trailed because this is double top, and everybody on YouTube that has a YouTube channel says tops become bottoms and bottoms become tops, and this is a classic scenario where this should be resistance. Not everybody stops or resting just above that. So be mindful. If we get through there and trade to 96.20, that could be a catalyst to send us lower and take out that low here. And see a little bit of a retracement on this wild euro dollar decline. We could see it come back up. Try to rebalance around 1450, 1445 area. Cable, as I said, I think it'll be sloppy the rest of the today, and then we'll see what we get going into tonight. I'm going to make the live session, the initial live session. I'm not going to put the second link up for the New York session until I complete the 4 a.m. session. Now, just so you know, at 4 a.m., I'm just going to be giving you the analysis real quick and short. And as I'm saying that, it's probably better if I did a pre-recorded. I know what's going to happen. It's going to be so short that people are going to either oversleep or come in late, and they're going to try to get in there, and they're going to send me 100 emails saying I can't get in, it's not working, and the session will be over. So let's do this. The New York session will be, as it normally is, 8:15 to 9:45 tomorrow. But I'm going to do a pre-recorded commentary so that way everyone can see it. It'll be short, sweet, to the point, and it'll be posted at 4 a.m. my time. That's fair enough, correct? Because the scenario is going to be what it is, and it is what it is. And if I can frame it where I put limit orders in, that way you'll have it, and you can just do the same thing in your demo. Because I'm starting to think about it, because if we get in here at 4 o'clock, I'm going to end up going right into 5 o'clock, and then I will not be rested to go into the New York session. And then New York session tomorrow will be a flop. And I need to have the time and energy to go through what we're going to talk about in regards to the 2016 moves for the information you were taught in lesson 1. So that's what we'll do. We'll do a pre-recorded session that'll post at 4 a.m. New York time, and then we'll have the live session at 8:15 tomorrow, as we normally do. Makes it easy, real easy, quick, digest it, and done. Because if I do anything longer than that, say it's like a 15, 20-minute live session, and I close it, and you don't get there live, and you go in to watch the recording, well, you're going to watch it, and then all of a sudden 4:30 comes, and you can't participate, so it doesn't make any sense. It's just better to me to do a pre-recorded. So dollar CAD in summary before we close. I think that we will spike up 29.50, 29.70, and that could be a sell. I'm not saying sell it. I'm just saying that could be what they use to take us up here and then make a run down into 28.50s. So that would look like this. Right there. I think it can go there, but I think the trigger would be here. So we'll set that to red. That would be the sell point, but I think it can touch 29.70. If it goes there and rejects and starts to go lower, the objective is the 28.50. Well, hello, Bella. So I think that's the scenario. We could spike up here, blow out all the buy stops, fair value gap closed in, sell off 28.50, and there you go. I think that's going to be the probable scenario. If we trade through 29.70, the buy stops here will just push us all the way up into 30.20. And that's the business for today. I'm going to give you guys a recap later on this afternoon, and we'll be again live tomorrow at 8:15 a.m. Nice movement so far for the week, and hope we'll see more of it tomorrow. Until then, wish good luck and good trading.